Have you ever stopped to think about how a huge global company, we're talking thousands of employees, sales in dozens of countries, actually knows where all its money is? Well, it's definitely not magic. It's a fundamental process called record to report, or R2R for short. And look, if you're thinking about a career in finance, this is something you absolutely need to understand. So let's break it all down.
I mean, it really sounds like an impossible job, doesn't it? Trying to keep track of millions of transactions every single day and then somehow turn all that chaos into something clear and useful. But that's exactly what finance pros do. And the secret sauce is this very meticulous, highly organized process we're about to dive into.
So here's our game plan. We've got 4 sections to walk you through it. We're going to start with the absolute basics, then we'll look at the engine that drives all of this. After that, we'll talk about what a career in this space actually looks like. And finally, we'll zoom out and see why this whole thing is so important for any business.
All right, let's jump right in. First things first, what exactly are we talking about when we say record to report?
Think of it like this. R2R is the entire life story of a company's money. It starts from the very first moment, say a single transaction when someone buys a coffee, and follows that money all the way through the system until it ends up on a high-level financial report. You know, the kind of report a CEO uses to make huge decisions about the company's future. R2R is the whole journey.
And that journey happens in 4 main stages that just keep repeating. It all kicks off with tracking every single transaction. All that raw data then gets used to maintain the official accounting books. Then, from those books, you generate the financial reports. But it's not over. A really crucial part is constantly keeping that data up to date, making sure everything is spot on. It's a cycle, really, that keeps the financial picture crystal clear.
Okay, so now let's get to the very heart of the R2R process. This is where we find a super important tool called the General Ledger.
You gotta love that description, the Master Financial Diary. That is the perfect way to picture the General Ledger, or Księga Główna if you're working in Poland. It is the company's single source of truth. Every single financial event, no matter how big or small, gets recorded right here. It's the ultimate book of record.
Now, this diary follows one very simple but incredibly powerful rule: double-entry bookkeeping. It just means that for every transaction, you make at least 2 entries, a debit in one account and an equal credit in another. This is what makes sure the books are always balanced. It's like a fundamental law of accounting that keeps the whole system honest.
You know, working in this field has a really distinct rhythm. Throughout the month, it's kind of a steady pace. You're handling routine stuff like posting prepayments or creating new assets. But then comes the month-end closing. This is when things get intense. It's a sprint to perform all the key adjustments needed to finalize the books for that period.
First up in this month-end sprint is booking what's called depreciation, or amortizacja. Just think about a company buying a new car. A year later, after a ton of miles, is that car worth the same amount? No way. Depreciation is just the process of accounting for that loss in value over time. It gives a much more realistic view of what the company's assets are actually worth.
Next, you've got provisions, or reserve. This is kind of like looking into a crystal ball. So if a company knows that historically 1% of the phones they sell will come back for a warranty repair, they can create a provision. They set aside the estimated cost for those future repairs right now. It's all about making sure there are no nasty financial surprises down the road. Now, for any global company, money held in other countries is always changing in value. That's where currency valuation, or Währungswert Walut, comes in. The million euros a company has in a German bank account might be worth a different amount in US dollars at the end of the month compared to the beginning. This process just updates the books to reflect the latest exchange rates.
And finally, the last big step is account reconciliation, or uzgadnianie kont. This is the grand finale. It's the last check to make sure everything lines up perfectly, that the detailed records match what's in the general ledger. It's how you know for sure that the data is solid and trustworthy before any reports go out.
So, you're getting a feel for the process now, but what does this all mean for you? What does a career in record to report actually look like?
While the career path is usually pretty clear, you'll likely start as a junior accountant, basically learning the ropes, booking documents, and helping out the senior folks. As you get more experience, you move up to an accountant role with more responsibility. And from there, you can become a senior accountant, where you're the one leading that month-end close and training the new juniors.
Now, obviously, you're not doing all this with a pen and a paper ledger book. You're using some seriously powerful software. And the biggest name in the game is SAP. SAP is what's known as an ERP system. The easiest way to think about an ERP is as the company's central nervous system. It's this one massive system that connects every single part of the business, finance, HR, sales, you name it, so everyone is working from the exact same data. Let's make this a bit more real with a quick example in SAP. Don't worry about all the details on the screen, just get the idea. So say the company just bought a new laptop. Your first step is to tell the system what kind of thing this is. You look through a list like this one and pick the category for computer equipment. That's called choosing the asset class, and it's step 1.
Okay, next up, you fill in what's called the master data. This is like the asset's personal information, its name, a unique inventory number, things like that. You can see here it's an HP 3525 printer. This gives the asset its own unique identity in the system, so we know we're talking about this one specific printer and not any other.
And for the final step, you have to tell SAP who in the company is responsible for this printer. You do this by assigning it to a cost center. The term you see here is MPK, which in Polish stands for the place where costs are created. So by assigning this printer to the Cadre or HR department, any costs related to it, like repairs or supplies, will be correctly charged to HR's budget. It's how a giant company keeps track of who's spending what. We've seen the what and the how, but now for the big one. Why does any of this really matter? What's the point?
Well, here's a perfect example. Intercompany accounting. Picture a huge car company. One division makes the engines, another division makes the seats, a third one assembles the car. They're all part of the same parent company, but they technically sell parts to each other. Intercompany accounting is the super complex but super important process of tracking all those internal sales so you don't accidentally count the same money twice when you look at the company as a whole. It's tricky, and it's vital. And that's just one area. When a company gets R2R right, the benefits are huge. The data is cleaner and more accurate, which means you can get your reports done way faster. It saves money, it makes the whole finance team more efficient, and, this is the big one, it leads to much smarter business decisions because the leadership team can actually trust the numbers they're looking at.
So let's just bring it all home. Record to Report isn't just about shuffling numbers around. Not at all. It's the engine that transforms raw, messy data into real business intelligence. It creates the financial map that leaders use to steer the ship. Without a solid R2R process, they'd basically be flying blind.
You know, every single career in finance, every big decision, it all starts with one single transaction, one entry in the general ledger. Now you know the story that little entry is about to tell and the journey it's going on. So the only real question is, where will that journey take you?